Good morning, guys. So today we are going to discuss here about the Indian Accounting Standard 20. Now, what is Indian Accounting Standard 20? It basically tells about the government grants. If any business is there and if they are receiving any government grants in doing their business, so what will be the treatment of this government grants will be there in their financial statement. Now, in this government grants, we are going to discuss about the meaning. What is the meaning of government grants? What will be the recognition criteria for the same and how we are going to measure it? And what will be the what are the different types of government grants are there? Accordingly, we have to see how they are going to measure. Okay, so let's start. So first is the meaning. Basically, if what is government grants? If you are getting any help from the government in just clearing your files and all, or if you are getting assistance from the government in the form of any fixed asset or in the form of any cash. So these all will be your government grants. If any help or relief you are getting from the government regarding your business. Okay. Now please read it that government grants is assistance from the government in the form of transfer of resources to entity for past or the future compliances of the condition. That government grant you can receive or the assistance you can receive in the form of resources for the past events if any loss has happened in past, or in future if we want to develop it more and more. In both the cases, if you are receiving any kind of resource, that could be your any kind of fixed asset, that could be any kind of cash you are receiving, so in that case it will be your government grants. Now, what is the second condition? That government assistance should be equal to admin help also. Here, admin help could be like that you are going to start any business in some underdeveloped state. Okay. Now you want to, if you are going to start, you want some help from the government. So in that case, if you are establishing any business in an underdeveloped state, so government is going to help you for sure. Okay. So in that case, they can give you some cash, or in that case, they can give you the land to establish that uh, business in that underdeveloped state at a very low cost. Okay. Or they can help you that in the in getting the registration of the company, we have to go with a lot of offices to get it done. Okay. Now in that case, if government is involved there, so in that case they can just clear your files in by going in one office only. So that kind of help here is admin help. Okay. So if these kind of things you are receiving in these forms, if you are receiving something from the government, so that all will be government grant. Okay. Now in our balance sheet, the question is how we are going to show it in our balance sheet, whether it will impact our balance sheet only, or it will be impacted our statement of profit and loss account. Okay. So how first, the very first thing, how we are going to recognize it? So actually it have two principles, that is the prudence and the accrual. Now what is prudence? Here, whatever assurance, whatever the help we are going to receive from the government, there should be a assurance of the same. Okay. It should not be only on the paper, but in actual also we are going to receive that kind of assistance. Okay. That is the first condition of the prudence. And after some time or after a specified period of time, it should be received. Then only we will recognize it as a government grant in our financial statement. Otherwise, we will not recognize. It should be the assurance from the government, and there should be we should receive also that kind of grant, whatever the kind of grant the government is giving. Okay. Now what is accrual? Accrual here means whatever the expenses we have incurred, that should be matched with the income or the grant which we have received from the government. Okay, there should be a match of expenses and the grant which we have received from the government. Okay, so it basically based on prudence or the accrual. Now we will talk here about the types of grants. According to the type of grant only, their measurement will be done. Just wait a minute. Yeah. So now what are the types of grants here? If we talk about the types of grant, there is a two grants. First is revenue grant and second is capital grant. Now, what is the definition here of revenue or the capital grants? So basically, if any grant from the government we are receiving to train the employees or to hire any employees, okay, so in that case, that grant will be your revenue grant. But if we are receiving any grant in the form of asset, okay, that asset could be any machinery or a land or a cash, whatever. Okay, so if these kind of any kind of asset we are receiving from the government as a grants, that then all will be capital grants. Okay, now we have to figure out first whatever the grant we have received from the government, whether it is a revenue or the capital grant. Okay, if it is a revenue grant, so we all know if any items are there which are in the nature of revenue, so that directly will go to profit and loss account only. It will not impact your balance sheet. But if any capital nature of grant is there, so it will impact your balance sheet, as well as in some case it will impact your statement of profit and loss account as well. Okay, so if any revenue grant is there, what are the grants could be there in the revenue grant? That grants to train the employees or to hire the employees. Okay, the conditions are there. Every time with the government grants, some conditions will be there. Okay, till the conditions will be fulfilled, that government grant will be the long-term liabilities for us. Okay, so revenue grants here means that only to train some employees. If you are going to start a business, so the government will apply some conditions that if in your business you are employing 1,000 employees, so in that case we will give you some grants for the same. Okay, now if these kind of grants are there, so that will be your revenue grant. So if any revenue grant you are incurring or if you are getting from the government, so that should be shown as a income in the profit and loss account, or that should be deducted from the related expense in the statement of profit and loss account. Okay, here it means you can show it as a income also directly to the statement of profit and loss account, or for what purpose you have received this grant, from that expense also you can deduct from the statement of profit and loss account as well. Okay, there is a two conditions you can do, but the government revenue grant every time will be going to statement of profit and loss account only. Now come to capital grant. In that capital grant, you have a two kind. First is your asset cost reduction method, and second is your deferred income method. Now, what is the basic difference here between asset cost reduction method and deferred income method? When we will calculate the amount of capital grants, or if we are going to show it in our financial statement, the amounts will be same. The answer after the calculation, the answers will be same, but their methods are different only. Basically, in the asset cost reduction method, whatever the grants we have received for any particular kind of asset, as the capital grant are only for asset. So if we have received any kind of grant from the government in purchasing that asset, then we have to deduct directly from the cost of asset only these capital grants. Okay, then whatever the amount of the asset will come, in that amount of asset we have to just charge the depreciation. Okay, Now, what will be the impact there in the balance sheet or in the statement of profit and loss account? As we will receive the capital grant from the government for the purchase of any asset. In that case, cost of asset will decrease. For example, if we have purchased one machinery which was costing rupees 1 lakh, now in that 1 lakh, 20,000 will be given by the government, as a grant. Now in that case, if you are calculating it from the asset cost reduction method, so that grant you are going to deduct from the cost of the asset. So now what is the cost of the asset? That will be 80,000, 1 lakh minus 20,000. In that case, your cost of the asset has decreased. If your cost of asset will decrease, obviously your depreciation also will going to be decreased. Okay. Now, what will be the entry? As we have received or we have received that government grant, so what will be the entry? That bank account debit to asset account. From the asset only, we are going to deduct, and whatever amount will come, we are going to show. As we are reducing our cost of the asset, so asset will be credited here with that same amount of the grant. Okay. Now, as I told that government grant every time will be given with some conditions. Okay. So if these conditions we are not going to fulfill, so there is a possibility that government will ask to refund their grants as well. Okay. For example, they have given 20,000 rupees to purchase this machinery. Okay. Now, with the condition only, they will give this grant. The condition could be like, if we are giving a grant to you, you have to, at least for 5 years, you have to employ 50 employees in your company. Okay. So all 5 years, you have to employ that employees, 50 employees in your company. If in any year, if you have reduced the employee from the 50 to any number, so in that case, government will ask for the grant to be refundable. Okay. That is why this government grant every time is a long-term liability for you. For 3 years or 4 years or 5 years, they put the condition on you, and accordingly they give you the grants. Okay. So as this will be every time with the conditions of 3 years or 5 years, so we can't charge the grant amount in 1 year only. We have to charge it in that particular conditions year only. Okay. If the example is here for 5 years, you have to maintain the 50 employees in your company. So that 5 years, that government grant should be distributed in all 5 years equally. Okay. Now, if your grant become, if you are not fulfilling the condition of the government, okay. Say example, in 3rd year, you were not able to maintain that 50 employees in your company. In that case, what will happen? They will take, or they will receive back or take back the money from you. Okay. So in that case, what will be the condition there in the financial statement? In that case, your cost of asset again will be increased. Okay. Like 1 lakh was the cost of the asset. When you got the government grant of 20,000, then your cost of asset was decreased to 80,000. Okay. Now, again, if you are refunding back that amount to government, so in that case, cost of asset also will be increased. Again, it will be increased to 1 lakh. In that case, depreciation also will be increased, as if it is at 20%, so it will be 20,000 for you. Okay. In that case, it could be 18,000 or 17,000. Okay. Now, what will be the entry we are going to pass? That asset account debit to bank account. Just the reverse entry will be here. Whatever the amount we were crediting to it decrease the amount of the asset, again we will increase the amount by debiting the asset account, and we have to give back the amount to the government. Okay. Whether it could be to bank account, or it could be government grant payable account. Okay, now come to deferred income method. Here in the asset cost reduction method, directly we were reducing our cost of the asset by just deducting the government grant from the cost of the asset. Now, in the deferred income, we will not charge this government grant from the asset, but we will take it as a separate income. Okay. Now, why it is written over here, the deferred? Because as the government, some conditions will be there that would be there for 3 years, 4 years, or 5 years. So as we are going to write off this income in 3 or 4 or 5 years, so it will be your deferred income. Okay. Now, what will be the condition here? If the cost of asset is there or depreciation is there, it will not be impacted. Okay, whatever the cost of asset is there, when we will do the entry, we will show the actual cost of the asset. On that actual cost only, your depreciation amount will be deducted and you are going to show it in your profit and loss account. Okay, and the next entry will be the separate entry for that government grant. That will be what? Bank account debit to deferred grant account. Okay, now as you are treating it as an income only, so that grant income should be transferred to statement of profit and loss account. Here your government grant was included in cost of the asset only, so whatever the cost of asset was there, that directly we are showing it the balance sheet. Okay, but here in the case of deferred income, this government grant will be treated as an income and it will be transferred to statement of profit and loss account in proportion to the depreciation which we are going to charge on asset. Okay, like if on this asset we are charging at 20% of the depreciation, so in this proportion, 20% of the proportion only, this deferred income also, deferred grant is also writing off in that 20% of the amount only. Okay, and this grant will be treated as an income in the deferred income method and we are going to show it in a profit and loss account. So that is all for the introduction of government grants. In the next class, we will discuss some new topics. Thank you, guys.